Hello everyone and welcome back to another video. Today we're going to talk about some of the strategies that you can use to limit or reduce your loss on a bear market. We all got a little surprise with the recent events of Bitcoin crashing all the way to, I think it was $42,000 if I'm not mistaken. Even though the price has adjusted back again right now, some think we are seeing the early stages of a bear market. With this Bitcoin meltdown that we've seen, all the other coins kind of followed it, and we had a very red day 2 days ago for me. This video is gonna take 1 or 2 days to go live, so probably 4 days ago for you watching this video. But the question still remains, even if we're not in a bear market right now, these strategies that I'm telling you still apply. You can start doing them right now, so your capital is going to be a little bit safer than if you were just holding some coins, if you were just holding some cryptocurrency. But before I start showing you all these methods, make sure you leave a like down here below. It's just a click of a button, but it helps me a lot and it helps the channel to grow. And if you're not subscribed but you like what you're seeing, make sure to also click the subscribe button so you don't miss any more videos here on this channel. But let's get into it. So the biggest question everyone is asking is, should we take our money or leave our money into staking? Well, this depends. And I'm going to show you how sometimes it might be worth it to leave it there staking or to take it out and put it somewhere else. Okay, so first case first, let's say you are invested in a DAO, Wonderland, Klima, Olympus DAO, Hector DAO, Spartacus DAO, doesn't matter. Let's say you are invested and the crypto market starts falling down, starts melting. What do? Should you stake? Should you unstake? Take your money out, cut your losses if you're in the red, or take it out already because you're already in the profit and wait for the market to stabilize, to go all the way down, and then you buy back and then you buy the dip? Or should you just leave it there? Well, I can show you right now that in these cases, if we're talking about DAOs, for me, I think it's way better for us to leave our money staked in there. I'm not a maxi, so it's not because I don't have that mentality of whoever unstakes, whoever takes profits, they're hurting the ecosystem. No, I think you should take profits whenever you can. These are facts. Some maxis, they don't like when anyone stake because you need to keep money in the ecosystem to make the whole thing works. I'm not one of these guys. I think whenever you can, take profits on whatever, stock market, crypto market, whatever. If you have some profits and if you think you're overextended, take profits before it's too late, or start taking profits little by little. But this is not what we're talking about. In this case, I think you should leave your money there staking because of the power of compounding. And now we have a very, very nice tool that we didn't have before on the majority of the DAOs, which is a calculator that you can use to see how many days will it take for you to recover your money or for you to be positive again when a market crashes or when the governance token crashes. Time or heck or whatever. How much would it take for me? How many days would it take for me to be positive again or to be even? Well, now we have this calculator and we can take a look at it. We are here on Wonderland Time and you can see the dashboard. The price fell quite a bit. I think it got all the way to 5,900. And when prices are going down, minting is negative, so you're not getting any benefits for minting because the price is already going down. But since the price has been climbing up again, minting now it is positive. Oh, you guys can see minting now is positive. During these red days, minting was negative for almost everything. I think only MIM was I think 1%, 2%, but still it's not very profitable for you to mint when the price of time or the price of any other governance token is falling. But right now the prices are stabilizing, and I think we have a very nice return on investment for minting. But again, we have right here this calculator, and we see this page right here. It says how much time is right now, what is the current APY, and how much memo I have in this account. So it's very straightforward. I'm gonna put the max memo that I have. You can put the initial amount that you started with. Right here, this is already the full amount with all the compounding that already happened, all the rebase amount I got. This is the current APY. This is the price at purchase and the price in the future scenario that we want to analyze. So I got in at 79.50. So in this account, I got in at a very high level entry. So let's say time starts tanking and time goes to 5,200. Okay, so when I started, my amount was around $444 because it was 79.50 per time. And now my current wealth at 63.26 is 353, so almost $100 loss. So right here we see that if tomorrow time goes to 5,200, I will have $295. This right here is my total investment. So I will have lost half of it, almost half of it. So if I unstake my money right here at 5,200, I'll have a loss of $150 more or less. But if I keep it right here and I keep it compounding, in 24 days only, I will have made my money back. But this right here is just in dollars. What we're not considering here is something more important, that the price will still be lower than when I bought in. This is correct. So price wise, it will be down, but in market share, I would have a bigger market share because I started with 0.055 and now I'll have 0.086 time. So my size of the market share, my percentage of the total market share will be higher than it is today. My capital will be growing. And this is the difference between leaving my money staked right there or unstaking. If I unstake and then I buy the dip, I'm not going to have the power of auto compounding that keeps buying more and more time, growing my market share, growing my percentage of the market share. And we can see that if then after 24 days the prices go up back to 6,000, I'll be already in the profit. I'll be already green, $100 green, $100 positive. So this is why I think is a good thing, a really good thing to keep my money there. So the amount of time that I have in my wallet will keep increasing. And then since I am very bullish on time, on everything they want to do in the NFT gaming industry that they want to get into, all the future projects they have, I am very bullish on time. So I think time will go back up again. So for me, it is a good idea to leave my money there. Now, when should you not leave your money there? Well, maybe if you got into a farm that you were kind of skeptic about, like for example, let's say you got into a pangolin AVAX LP pool and is paying you 50-60% APY. Well, in that case, if you're skeptical about it, that it's still gonna go up, that you're gonna be profitable, I'd say take your money out ASAP, so you don't have any risks of impermanent loss. You don't have any risks of the tokens melting down. and you're getting out at a very low point. And another reason similar to this is if it's paying you a very low APY, 50%, it is high, but it's not 70,000%. So 50% APY, if the token melts, if the coin, for example, melts 50%, it is way faster for me to recover on something like Wonderland Time, because it's paying me, because the APYs right here are ridiculous, than it is for me to recover on something that is paying you 100% APY, 50% APY, 80% APY. If it's paying you more than 500%, maybe yes, it won't take so long for me to take my money back, my initial investment back. So let's say we put 100%, $100. This $100 goes down to $50 because the token goes down 50%. Then I'll have to make double the amount of these tokens. So I need to make double the amount of these tokens for me to have $100 again. So if you see that the farm is going to take a lot of time, you can do this calculation by doing, if you do the calculation and you see that it's going to take a long time, a long period of time for you to get for you to achieve that, the same amount of investment that you got in the early, the same amount of investment that you put in. If you see that is a very long process, I think take your money out. Don't waste your time. Don't waste your, even more so if you don't believe in the token, if you don't think the market will be kind with the token, still gonna push it lower and lower and lower, then get out ASAP. So let me show you the Hector DAO calculator. So the Hector DAO calculator is basically, it looks identical to the one on Wonderland. All these DAOs now have some sort of calculator like this, but you can see how, so you know how it works. So when I got in, it was $227. And let's say this price goes to 100. So basically I lost $100 already. So it will take me 36 to 37 days for me to make my money back, or for me to be even in dollar amounts, not in heck amounts. Because if we take, because in the beginning we had 2.25 heck and now we have 5.10. So we doubled our amount of heck in 37 days. So if you're bullish, if you think the token will go up, then eventually you will make your money back by leaving it staked. And let's say it never recovers. Let's say if stays to 100, or let's say it goes to 50 and it stays down on 50, whatever, but you are still going to hold it for a whole year. In the whole year, you'll still be positive. Take a look. Even if it goes down to 50 heck, $50 per heck in 1 year, you will still have made, hypothetically, $351,000. You will have 7,024 heck. So let's say half a year, you would have like 12 times your investment, $6,000 in half a year, even though the market melted. So this is the power of auto compounding, because look at how much more heck we have than when we started. So that's why I say, if the math is on your favor, keep the money in, keep the money on auto compounding. But we also have another way for you to keep your capital safe, when the market is melting. And this is stablecoin farming. Well, you can always just buy stablecoins and wait for the market to stabilize. But by doing so, if you have X amount of tokens, by the end of it, you're still going to have X amount of tokens. Nothing will change. If you start with 100 tokens, 100 stablecoins, by the end of it, you will still have 100 stablecoins. But what if you can put that money to work? Even though the market is melting, you can still make money. And how would you do that? Well, stablecoin farming. I made a video about stablecoin farming. It's not very updated. I might do a new one showing you new farms that have come out on new blockchains, some and new updated versions and APYs. But so far, this video can guide you in the right direction. Let's say, for example, we go to UNSTAKE and I type USDC, remove my camera, and on USDC we can see right here that we have so many choices. We have single asset farms, we have LP pairs, we have triple asset farms, and then we have LP pairs not only in stablecoins but like a stablecoin and another token. But what we're looking at right now is, for example, we take USDC from Banker Joe's or from Banky or from Aave, is paying you a good 14% annually for not doing anything. So let's say the market goes down 50%, well, you're still 14% positive. While everyone else who was just holding tokens, they lost money, you made money. We have some LP tokens, stablecoin farming, double stablecoins, which is USDC and DAI, is paying you 19%. Very good as well. I am no longer using Tether. I think Tether is going to be a big problem in the early future because of the whole speculation that they don't really back their tokens to $1. So it's basically not even pegged to the dollar, 1-to-1. So I'm kind of skeptical of using Tether right now. I've been using a lot of USDC, DAI, a lot of MIM recently. So I'm staying away from everything Tether related. So overall, stablecoin farming is a very safe and very reliable way for you to make passive income, especially if you're putting there $200,000, $500,000. If you're a big whale, stablecoin farming for you is better than the stock market, I guess. But we have one last thing that it was my previous video for you guys now, which is something very new, which are tokenized precious metals. So gold, silver, and platinum, which if you know, whenever people are scared for a market crash in the stock market or in the housing market, whatever, what they always do, they buy precious metals because they are limited, scarce resource. So they have a limited amount of, they are in limited amount present in the world, and they're gonna go up in value. So what people do, they go and they buy gold, silver, uranium, platinum, all titanium, all these precious metals. And now we have the opportunity of doing that and getting yield on these metals. If you want to know more, it is my latest video. I'm gonna leave it up here so you can check it out. But it is basically you are buying a tokenized version of silver, gold, and platinum. I recommend silver because right now it's the only one you can stake and get a reward for it. And these tokens are pegged to the real metal. So for one token of silver, that is 1 gram of silver present, the platform Horus has 1 gram of silver locked in a vault, a physical vault somewhere in the world. So you buy this silver, this tokenized silver, which is called AWS, and you stake it. You can always stake it with an ETH pair, so AWS ETH, and you get 300% APR, so around 1700% APY if you stake the LP pair. But if you stake only AWS, you get 80% APR, which is not bad in my opinion, still very good. And these tokens, since they are pegged to silver, gold, or platinum, they won't melt when the market starts going down. They'll keep their value, their market value of the metal. So it's a very good way for you to hedge your position in the crypto market. Again, if you want to learn more about it, you can go to horus.io, or you can check out my latest video up here. Of course, there are many other ways that you can protect yourself in a bear market. There are options right now. You can trade options. You can buy puts on Bitcoin, on ETH. They're still very expensive, so only if you have a very high capital you should do these things, or if you know what you're doing. But for us that have not so much money to invest right now, I wouldn't recommend options trading for crypto. they're still very expensive. But if I missed any other way, please comment down in the comments below so we can all learn. I'm not the master of crypto, so I'm here to learn as much as you guys are. So comment down below if I missed something, or if I say something that is very stupid and very wrong, comment down below and I'll be happy to listen to what you have to say. If you got all the way to the end, you know the drill. The word for today is going to be bear. If you comment bear, I know you are part of the end of the video gang. But again, thank you so much for reaching all the way to the end of the video, and I'll catch you in the next one. Peace.